Welcome to the new edition of the Energy Market News. Financial markets have been responding on a very positive note recently. This is mainly due to the change in monetary policy by the central banks. Both the Fed and the ECB both decided to continue their quantitative easing for the foreseeable future. The markets are even expecting to see a further rate cut by the end of this year in the US. Although manufacturing and production figures in Europe and worldwide have improved a little bit, we are still not talking about a very rosy situation. Markets are currently looking forward to a potential trade deal between the US and China, where apparently optimism reigns high. But the risk exists that once the US has concluded a trade deal with China, it will refocus its attention on Europe, and then a new trade war might begin. Closer to home, Brexit has been delayed again, now until Halloween, 31st of October 2019, actually 4 months longer than the UK had asked. The oil price has recently reached a level of $72 per barrel. This is on the back of production problems that we see in Libya, Venezuela and Iran. Meanwhile, we see also for March the shale oil output from the US increasing to its new highest level ever at 12.2 million barrels per day, although the increase starts to get a little less strong. The next OPEC meeting is scheduled for June, and doubts are starting to rise, specifically the tensions between Russia and Saudi Arabia. Thanks to magnificent weather, the demand for gas has been very low this year, and this has had a combined effect of not only lowering the consumption, but also keeping a lot of gas remaining in the storages. On top of that, due to a higher utilization of nuclear power, mainly in Japan and in South Korea, more LNG cargoes are on their way to Europe. At the same time, pipeline imports continue to be very strong, although we have had a few of unplanned maintenances on the Norway pipelines, which have kept prompt prices a little bit more elevated. As you can see on this graph of the TTF Cal 20, we had from our lows at 18 euros per megawatt hour a rebound back to about 20 euros per megawatt hour due to the rise of CO2 prices. EUA prices have been rising quite strongly lately. As you can see here, EUA prices are now at the highest level at 27 euros per ton, higher than at any other moment in the last 10 years. Due to very strong coal-fired generation in Asia, the coal prices have also been quite supported. The combination of high CO2 prices and strong coal prices have caused that power prices remain very much supported. The Cal 20 baseload in Germany has therefore risen to about 52 euros per megawatt hour, as well as the Belgian power for Cal 20 until about 55 euros per megawatt hour. Thank you for your attention and see you next month.